Welcome to SMSF Mate, our general advice warning. We are required to warn you that any advice has been prepared without taking into account your objectives, financial situations, or needs. And because of that, you should, before acting on any advice, consider the appropriateness of the advice, having regard to your own objectives, financial services, and needs. Where the advice relates to the acquisition or possible acquisition of a particular financial product, you should obtain a product disclosure statement relating to that product and consider the PDS before making any decision about whether to acquire the product.
Welcome back to SMSF Mate's podcast. This is episode 6. My name's Tim. I'm here with Gareth and Ashwin.
This is the Gareth voice reporting for duty.
I'm here to make sure Gareth doesn't go off the cuff
and say stuff I'm not supposed to.
And in this episode, we're going to talk about having an SMSF. I am looking for places to, invest and place trades, execute trades, buy different assets and that sort of thing. So I have shopped around. I've tried a few different options, and I'm just here, to discuss the pros and cons of certain players, and interested to hear you guys' thoughts as well. So.
Well, I'll happily tell you my personal story. So I think when I kind of embarked on the journey of a self-managed super fund, I sort of, as most people, kind of had a bank account. You do need a bank account for a self-managed super fund, so you kind of have to start there. So the default thing is to go to your standard bank and set up a cash account for a self-managed super fund. And of course, as soon as you start that application, I'm sure your bank will have a lovely little algorithm in the background that sends off a white flag to the self-managed super fund, stock trading department, and says, "Hey, we've got a customer. Come sell me something." So I'm sure everyone who's got a normal bank, whoever it's with, there will be a default system that bank uses to buy stocks and shares and whatever you want to call them. My particular bank seemed relatively reasonable. What I kind of didn't like about it was they charged a relatively high amount per share transaction. It wasn't volume limited.
Is it per share, or is it per trade?
No, it was per trade. And so what I wanted to buy very small parcels of trades. And so in percentage terms, if you wanted to buy $500 worth of shares, the transaction costs was a couple of percent. But then if you wanted to buy $50,000 worth of shares, then the transaction costs were very low. So that led me on a bit of a Google, and went Googling all sorts of things about low cost per transaction, and I stumbled on a broker, where you can buy stocks and shares and any kind of financial products, and they have a $500 minimum limit, but they only charge per share. So when you want to buy small parcels of shares,
it didn't hurt.
The percentage is a couple of dollars rather than a fairly large percentage of that transaction. So I think that was a really interesting thing that I learnt. And then the other thing I learnt was that there are a whole heap of funds, managed funds, private funds that your general person would never have heard of. And one of the founders of SMSF Mate has done a wonderful job of collating a lot of that information. And if you go to our website, smsfmate.com.au, and click on the investment products, this isn't a plug by any means, but
shameless plug.
Shameless plug.
Sounds like it.
And there's no fee for this service, but it's a wonderful collation of a whole heap. There's 1,000, 1,200 or so individual funds that you probably have never heard of, and there's all sorts of things on there that do good returns, bad returns. There's a million different ways of looking at it.
1,200 PDSs there.
Yeah, lots of reading, but
I think Gareth brought a good point. Like, if you're transacting on a low level, which generally probably points that you're doing a lot of trades, if you're buying $500,000 parcels, those transaction fees are
$500 parcels, not $500
parcels. Those transaction fees are important because it's going to eat into whatever profit you're doing in your trading side of things. Now, if you're the sort of person buying $1 big chunk, like your 50, 100 grand sort of chunks, so then, that low cost per transaction is probably going to work out maybe better than the per share return. So you got to make that decision. And probably the flip side from an accounting point of view is how good is the data collection and reporting from that trading account, because obviously more time it takes to get that information, the more your accountant or provider for your financials is going to charge, because it's taking more time to collate the information. So that's also the other thing to run through. You might want to check with your providers that are doing your annual statements or your audit on what products they might recommend before just jumping on the low cost option.
Because what I might save at the front end, I'm going to get slugged at the back end.
Accountants charge, in the hundreds of hours. So if you're adding an extra 10, 15 hours, then you might be eating away exactly what you just saved in your head. So
your transaction fees.
But maybe there is a way around it. So those are the other things to look at, because, a lot of things do sync and talk to each other. And those are things to talk about with your accountant and make sure that at least you're being responsibly saving money that way.
There are a lot of options out there, and I guess just in my experience, I have used one of the big four banks, their options, which you mentioned, Gareth, and that is convenient because your money is within your kind of internet banking world. It's easy to move funds around. It's convenient. That convenience could come at a cost. Opposed to having to transfer a chunk of money to a specific broker account. That takes time sometimes.
Yeah.
Or at least it did, before Osco and instant payments
It still takes a day or two normally, though.
Yep. So there's that. You've got, very almost recently you've got all these fee-free type services, which are out there. They don't charge a commission for trades, and they seem to.
How do they make their money then?
Well, that's a whole nother
podcast.
I believe they make money on the deposits that they hold. Cumulatively, they might make a very small interest margin on that.
So your money might be on trust then, effectively, right?
Yeah. And there's potentially risk there. They also execute the trades as well, so they may or may not be clipping the ticket on that.
What do you mean by clipping the ticket?
They could be executing through like a dark pool, for instance.
Right. So I say I want to buy a share at $10.
Yep. Or you might go to the market and say, I want to buy a share at the market price, and the market price could change suddenly as you execute your trade, and then the algorithm will buy that $10 share and then sell it to you for $11, and then they make the difference. That's one example.
I think it's a valid point. You want to check if those shares are in trust, and given a super fund, it's really important from an auditor's point of view how those shares are being held as well, and the account. So my personal view is I like platforms where you own them directly. So there's a bank account in the super fund's name, and you purchase the shares directly in that platform. So that account is actually its own BSB account number in your own name. It's not subject to.
Yeah.
How do you go about finding out that?
Those are questions you ask those platforms before you set up an account.
Right.
Yeah.
So what would you be looking for?
There's a bank account. Generally, you'd have a bank account in your own name.
Of the super fund.
Who's in custody of the asset?
Who's in custody of the asset, right? And those are the questions you ask. And most sites do disclose it. It's just where it is on their site and
the important thing, if you transfer funds to a broker, it may not actually be the account isn't in your name.
Yes, yeah. So and from an auditor's point of view, that's really important for them to know. And there's generally sometimes maybe an issue there, and an auditor might charge more, respectively of checking that sort of stuff for you. So yeah.
And I guess further to that, I mean, I've also had experience with full service stockbrokers, and they are certainly a dying breed in this
low cost option.
In this race to the bottom with fees and so on. But the full service broker, in my experience, you spoke about high commissions before, Gareth. These commissions were sort of eye-watering, sort of like $120, $150 a trade.
Wow.
But the benefit is, you are getting some level of advice. You're also getting some, pretty good deal flow, and, things which come across the broker's desk, you're getting access to potentially alpha ideas that they have, or capital raisings they're doing, which may not be, they're not available to.
Yeah, because not everything goes on the ASX,
That's
right?
Yeah. That's right. So that's, I guess there's a cost there.
Yeah, it's their way of, it's their way of paying for that opportunities.
That's right.
So, if you don't want to be part of an opportunity fund, you could try your broker, but, again, you got to do a bit more due diligence, obviously, on the broker side of, anything they're providing to you as an opportunity. There could be conflicted remuneration and other things in there. So, but yeah, worthwhile.
So there's a lot more options than
there's a lot of options there
to your standard bank account.
Yep.
Yeah, and I guess further to that more comprehensive broker that you had experience with, Gareth. So I imagine you would have access to international markets there.
Absolutely, that was one of the big attractions is that you don't need multiple accounts with multiple different brokers
and exchange rates
and exchange
so on as well.
rates, and you can buy ETFs, you can buy funds, you can buy Aussie dollars, you can buy US dollars.
No, all makes sense.
Yeah, you can, and that was the interest for me, but not necessarily for everybody. It was, and there are some platforms are far more complicated than others to set up, and
some have got some good reporting tools. Some have got their own research built into them. It ultimately comes back to what are you trying to achieve, and then finding the right platform. I think that suits what you're after. I think,
and you can have multiple. You don't have to have one.
Yeah, definitely can have multiple. Yeah. Just remember all your logins.
Yeah, passwords.
Password protect.
Thank you for joining us once again. If you're interested in our waffle about self-managed super funds, feel free to join us on smsfmate.com.au or search SMSF Mate in Spotify.